Hello traders, welcome back to the channel. So it seems this week of trading in the markets has been much better overall in comparison to the last week because we had the fear of war going on, but from there we have been able to bounce back pretty sharply. Just to remind you, in my last week's video, I had clearly shared that the first support is somewhere at 23,900 and the second support was somewhere at 23,678 to 23,737. So exactly from this support, markets have bounced back and yes, we did have a gap up. Things are looking much better, but there are few things which we need to discuss and concentrate on. So let's go directly to the monthly time frame charts. In the monthly time frame charts, I can say that the trend is up. Momentum is looking completely fine. In the weekly time frame chart, we can see that the trend is also up and it looks confident because of this first big green candle which has been able to close above the dual moving averages after a long time. And if you check properly, this is the resistance, the high of this particular swing. We have been able to close above this. So this is also a greater achievement by the index. Yes, things are better than before. It's not just a cautiously bullish view, but it is a proper bullish view. But we should also understand that this is a retracement on the upside because we are retracing the previous down move which happened from I think early October to possibly to the recent bottom which happened in the early April. Okay, so we are still retracing. We are not near the all-time high. This is something which we need to remember and understand. So going ahead, overall, I think things are looking okay. Things are looking better than before. And I think the next resistance for Nifty, if you just want to check in the daily time frame chart, then I think we'll have to use a Fibonacci extension over here. The next resistance, I think the next level which can actually be tested could be in the range of possibly 25,300 to 25,370. All right. Going ahead in Bank Nifty, overall trend is up in the monthly time frame chart. Things are looking okay. In the weekly time frame chart, the trend is up for sure. I can understand, but it is way too much overstretched. I think you can clearly make out one thing, that the space between the price and the moving averages is way too much and it's not very, very comfortable. So before going up, if Bank Nifty consolidates a bit, it would be better overall for the market. Now, looking at the Bank Nifty, we also need to understand that which is the sector which might actually help the Bank Nifty to stay higher. If it consolidates, it should not break this low and especially this low. This is the first short-term low. I'll just share this level with all of you. The level over here is 54,476 and you can see this entire horizontal zone, that is also support, and the deeper low is 53,433. All right, which is still far off from here, but at least this low should not be broken, which is the low of couple of days low. Okay, this should not be broken if Bank Nifty wants to consolidate and even stay higher, which is very, very important. Looking at the private banking space, I think things are okay, but again, I would say trend is up, but we need to consolidate a little bit. PSU banking pack, if you have a look, then in the monthly time frame charts, I should say that we are consolidating. We are trying to come back from the overall bearishness. In the weekly time frame chart, we are still range bound, but in the daily time frame chart, I think we are trying to make a strong comeback. Last 3 days were a consolidation, so any sort of move in the next 2 to 3 days will be encouraging for the PSU banking pack. Okay, energy sector. Energy sector has been booming with high momentum. You can see the way it is retracing on the upside. Even the last week's candle has been very, very confident. And looking at the daily time frame chart, I should say that yes, overall we are in a strong uptrend in the daily time frame chart. And The next resistance for this particular sector could be in the zone of 36,000 to 38, and above that could be somewhere around at 38,188. Overall trend stays up without any doubt. Okay. Auto pack. Looking at the auto pack also, I should say the way somewhere in this zone it was trying to consolidate, but the way we have opened gap up, okay, the way we have been able to open gap up, and after the gap up we have been able to continue on the upside. This is a very, very good sign. This is a very, very good sign, because auto was one of the sectors where it was not clearly visible what will happen next. So I think things are looking okay. We are now in the range of this resistance, which you can see. This is a resistance zone over here and somewhere even over here. So yes, you need to be a little bit more careful, but overall trend, overall biasness is right now on the upside. All right. Consumption pack. Consumption pack, looking at the monthly and the weekly time frame charts, things are looking okay. But just one thing which we need to understand, yes, we are again near a resistance zone, and this resistance zone is not a normal resistance zone, because if you just plot a Fibonacci retracement, I'll just make things better for all of you to view it. Okay. Now, if you retrace this entire chart properly, and you will be able to notice that this is not a normal zone. This is the 50% retracement, and this 50% retracement is coexisting with this cluster. So this is definitely a very, very important and a strong resistance, and we will need serious strong buying coming up from this sector. Only then you will see some momentum on the upside. All right. Okay. Now, finance pack. Finance pack, overall things are looking great. One of the greatest momentum sectors, one of the strongest uptrends. Overall things are looking fine. The trend is up. Momentum is also okay. Again, I'm not just confident about one thing, not comfortable about one thing. That's the right word to use. That the space between the moving averages and the price is a little bit too much for my comfort. So I think a little bit of consolidation will be encouraging, but overall view, overall trend is surely on the upside. FMCG pack. Now, FMCG pack, in comparison to the few other sectors which we just spoke right now, the view over here is slightly different. Trend is flat. You can see the price is still between both these moving averages. So the trend is flat in the monthly time frame chart. Trend is also flat in the weekly time frame chart. But the thing is that we are trying to bounce back. The FMCG sector is trying to bounce back from really important supports. You can see two trend lines are trying to provide the support, especially this smaller one. This is the most important support. So yes, the trend is flat in the weekly and in the monthly, but in the medium term or the shorter term time frame, which is the daily time frame chart, I think overall the trend is up, but looking at RSI, we can clearly see that there is no momentum. So I think once we surpass this zone in FMCG pack and then this zone, we may be able to see some momentum, some trend on the upside. Okay. But it should happen as soon as possible. The more time it takes, I think more vulnerable it will be to a little bit more consolidation and maybe a dip. So it has to happen as fast as possible. Infra pack. Infra pack, one of the strongest sectors which I've been maintaining my stance on this sector. The trend is up in the monthly time frame chart, even on the weekly time frame chart, and you can understand very clearly we have been able to trade above and close above this swing high. Encouraging stuff. And if you just use your fib extension over here, we can clearly see that we are near a short-term resistance. Overall trend is up, momentum is up. Only thing what we need to acknowledge in the infra pack is that yes, we are near short-term resistance. All right. IT pack. Now IT pack, suddenly I think it has taken a U-turn. If you just have a look at the monthly time frame chart, you will be able to see that the trend is flat. We have a very big hammer. We also have a candle which is not yet complete, but this candle so far in the mid of the month, it is looking a perfect candle, a perfect atmosphere where possibly you can say a contra bottom sort of formation is happening, a classical extremely big hammer and a classical bullish belt hold. Now, will this candle be as it is near the end of the month is something which we don't know. But if we go to the weekly time frame chart and we see very, very clearly, last week we were at a very big resistance. Okay. If you can see this, this was a very, very big resistance. 1, 2, 3 and 4. 4 times it was tested. And suddenly the price has been able to close above this trend line, which was holding on since mid of 2020. This is a very big thing. This is a very big thing. Now the value of this trend line has, I think, been negated. The importance of this trend line is not anymore. So I'm just deleting it. Overall trend in the weekly time frame chart is still flat. We are near 50% retracement. We also have this particular candle which is showing a wick, which is also a resistance. Yes. Now, if we go to the daily time frame chart, there is one more thing to see. The same wick which we saw in the weekly time frame chart, the same wick is this one. This zone, this small zone is providing resistance to the price. And this is the first time after many months, multiple months, you can see an uptrend in the IT pack. So I think some momentum, some bullishness, if it occurs in the IT pack, it might get a push on the upside. The IT sector certainly needs a push because you can see the way this sector has been correcting. It has been correcting with extremely high momentum. So if it wants to reverse, it will need a great strength on the upside. Metal pack. Metal pack also was one of the sectors which was like, consolidating, looking weakish because after the first rise breakout, it suddenly did fall on the downside. I'll just zoom out in this time frame. Okay. So you can see it gave a breakout initially, looked very strong, suddenly fall down, went up and started coming down. So it was looking weakish, but now suddenly it has started moving up, which is a good sign, certainly. But we need to understand there has been multiple times since the month of Feb where a number of times where the trend has changed. First, sideways trend, then a breakout, downtrend, consolidation, again an uptrend. So I think too much things have happened in a very short span of time. I would just say one thing. We do have a low over here. This is not a proper low, but I would just, as of now for short term, I would say so far so good, but we certainly need to surpass this high. Once we surpass this high, then I think things will get much better and confident for the bulls who are looking at the metal stocks in the middle pack. Okay. Pharma. I think pharma as a sector is still consolidating in the weekly time frame chart. Things are improving certainly. Even in the monthly time frame charts, things have started to improve. In the daily time frame chart, I should say that it is just a small glance. You can see very, very clearly over here that we do have a lower low, okay? And we have a high which is actually a higher high, but the difference between this high and this high is not very big. But yes, now we can say that we have a higher low. So if this momentum continues on the upside and this high is surpassed, I think probably we are at a juncture in the pharma pack where some sort of short-term breakout can occur. PSE. If you have a look at the PSE sector, I think I don't need to say much. Overall, things are looking fine. The trend is flat in the weekly and in the monthly time frame charts, but in the daily time frame charts, it's looking very, very strong. And chances are the trend can continue on the upside. Okay. Realty pack. Realty pack, I think one of the sectors which was not very, very strong. You can see signs of pullback. This candle is complete. The second one candle, this candle, the current month candle is not complete, but so far so good. It has also made a hammer. Obviously by the end of the month, which is the type of candle which will appear over here, we have no clue, but so far so good. In the weekly time frame chart also, we are still consolidating, but generally after a very, very big correction, initially, at times you will see that the weekly charts may not look very, very good, but the daily charts will start showing some signs of bullishness. And I think things have started to improve little bit, not a lot, but little bit in the, I think in the real estate pack. The next level which can be tested on the upside could be somewhere in this zone 971. We can also use a fib over here, and you can see exactly uh, in this zone, yes, exactly in this zone of 944 to 971 or 965, you can say. Within this zone, we'll hit the next resistance. Okay, this is the zone where the real estate pack will hit a resistance. Okay, fine. Midcaps. Midcaps have shown tremendous amount of momentum. You can see this candle, not yet complete, but at least this candle is complete. And I think overall trend is up, slightly overstretched, but with a little bit of consolidation, chances are that the trend might continue on the upside. So summing it up all, I think there were two sectors. One was IT, obviously for obvious reasons. Second one was the metal pack, and little bit again FMCG. These are the three sectors which need a bit of nudge, a bit of push on the upside. Overall, other sectors have started performing. Yes, this week has been much, much better than last week, taking into consideration that we had a war sort of situation between two countries. But we should not also forget that we are not in an uncharted territory. We are still retracing the previous downtrend which occurred in the last few months from September, October till the start of April. So yes, we can stay bullish, but not extremely aggressively, but because we are still retracing the previous trend. All right. So I hope this video will help you to understand how markets might move in the next week. Trade wisely. Thank you.